it's Royce Jacob. Welcome back to the channel. And in this video, I want to talk to you guys about whether or not the 2020 US presidential elections might crash the stock market or not. Alright, so before we get into this video at all, I need to preface it by saying that I have absolutely no idea how this will actually unfold. There's so many external factors at play. Plus, we're in a market environment right now that's unlike any other in history. So in that sense, we are in uncharted waters. So this is meant to just be more food for thought, give you guys a sense of both sides of the argument, and let you dictate this for yourself, all right? So the way I've chosen to structure this video, though, as I'm sure you can assume from the title, is in favor of a pullback come election time. That said, I do have a few articles to show you guys. There's this great trading view analysis that I want to read through with you guys, talking about what's happened in previous presidential elections during times of crisis, okay? So, I mean, credit where credit's due. I need to shout out this guy before we even get into it. Liberated Stock Trader. This is probably one of the best trading view analysis I've ever read, I've ever come across. So check him out on Trading View if you can just go show him some love, you guys. This is a great write-up. So we will read through this together. Again, beautifully written, and I just want to read through this with you guys, kind of give you guys my take on this. We will then move on to a few charts. So SPX, S&P 500, this is how I personally choose to sum up the equity markets. I feel like this is the kind of fairest, most middle ground way, like between the Dow and Nasdaq. So we will be looking at the SPX. I'll let you guys know what I'm thinking if we do happen to see a significant pullback in the S&P come election time. I then want to show you guys this, which is something I brought up in previous videos, but it really just shows how dislocated the current economy and the market are. I know you guys know that I've said this so many times before, and I'm sure you guys have heard it plenty of times as well if you haven't tuned in. But the stock market and the economy are completely dislocated at this point, okay? There's zero correlation between the actual economic reality and the stock market right now. So we will take a look at this. I'll explain to you guys why this is important in my eyes. We'll then take a quick look at the fear and greed index. People are greedy right now. I'll let you guys know why that's important as well. And after this, obviously, again, we will kick it off with the argument for in favor of a pullback come election time. But to close it out, I do want to give you guys my argument on the other side, okay? I feel like that's how any good debate should go. If you're arguing for one side, you should be able to debate the other side as well, okay? So I will give you guys kind of my side of the other side of this debate in favor of a stronger stock market, in favor of the stock market continuing the rally it's on. Okay, so that is how we'll end off the video, and on a good note in that sense. But again, we got to be real here, we got to be rational, and we will go over this. So again, Liberated Stock Trader on Trading View, you guys go show him some love. It's titled Presidential Elections, Crisis in Stock Markets. So again, I'll just read through this with you guys and chime in when I feel it's necessary. Presidential election crisis and crisis of confidence. The next big macroeconomic event to happen is the U.S. presidential election, and that got me thinking. What happened in the previous elections? The last two major crashes, the dot-com crash of 2000 and 2004 and the financial crisis from 2007 to 2009, both occurred during a presidential election. That's very important to keep in mind. The dot-com crash was underway for 8 weeks when George W. Bush took over the presidency. The ensuing carnage wiped out 4 years of gains. And we'll go back up to the chart afterwards, and I'll show you guys kind of what he's saying here. So 4 years of gains, this equated to a 41.64% drop during George W.'s first 3 years. Okay, keep that 41% drop in mind. The financial crisis was already well underway when Obama took over in November 2008. The total crash wiped out 52% of the value of the S&P 500. 24% of that loss occurred under Obama's reign. In total, the financial crisis wiped out 8 years of gains. The corona crash started during the last 7 months of Trump's term and is ready to be inherited by Biden or continue to be managed by Trump, depending on the outcome of the election. Crisis of confidence. Crashes and crises happen when confidence in a market is lost. Confidence is the difference between a functioning market and an economic disaster. Trump and the Federal Reserve have amazingly restored confidence in this market despite the disastrous ongoing economic events. Presidential crisis and confidence. The next election will be set in the middle of a crisis that has not played out its full course. The questions you have to ask yourself when betting on the market coming up in November are: 1. Which president, if any, will maintain the confidence in this current bubble market? And 2. Which president, if any, can maintain the confidence in this market long enough so the Fed can gently deflate the bubble over time? The question is not what you think the answer is. The question is, what do you think the market participants believe? Okay, and this is very important, you guys. You have to, it's not what the actual answer is, because there is no finite answer. There's no definite answer. But what will the investors, what will the capital allocators think about this? Confidence tricks. If the next president and Fed cannot perpetuate these confidence tricks, we might expect 4 or 8 years of the market gains to be wiped out. Summary. This is not a political commentary or prediction. It is observations based on the market's action during elections and crisis. Outlook. While this rally has been great and profitable for many, the coincidence of all-time market highs, economic carnage, and the current market euphoria suggests to me that a bubble waiting to burst. Outlook at this time, neutral in November, short. Okay, so again, you guys, I think this is a beautifully written article. Once again, if I've shouted him out enough already, Liberated Stock Trader on TradingView. Again, one of the best TradingView analyses I've ever come across. So we'll look here. You guys can see here. This is what he's talking about when he says 4 gains lost. Okay, so no crisis, Clinton. .com crash, George W. Bush is what he's talking about initially. No crisis under George W.'s second term. Financial crisis, 2008, 2007. 8 years of gains lost. So it pretty much just wiped out all the gains it had accumulated since that initial crisis after the .com bubble crash. So that's 8 years lost. I get what he's saying here, but that's kind of to be argued. Anyway, yeah, financial crisis Obama, that was a lot wiped out right there. And again, you guys can see here, even since 2008, since this crash, since the market started recovering in 2009, we have just gone absolutely parabolic. Obviously, until that pullback, that liquidity crisis we saw back in March. But that was immediately eaten back up. This has proved itself to be a V-shaped recovery, not in the economy. That's 100% a fact, but in the stock markets, which is also 100% a fact. All right. So that's that once again. For the last time, Liberated Stock Trader on TradingView. I appreciate you for this analysis. Credit where credit is due. We'll go here, you guys, and I'll show you what I think can happen. So this is something that I've been saying. I have to imagine a lot of people have been saying this since we saw this crash back in March, because everyone understood that the economic reality was terrible. And it to be completely honest, just completely objectively, unemployment's still bad. Small and medium-sized businesses are being obliterated off the face of the planet. It's super sad, but that is the objective reality. Okay. And you can see here when we crashed back in March, we almost came down to touch these highs where we spent a lot of time at from around 2015 and 2016. Okay, a lot of huge area of resistance around here prior to breaking out of this area of resistance and starting this rally over the past 5 years, like 4 or 5 years. Okay, and it's crazy to see how far we've come in those 4 or 5 years. All right, but I think that if we do pull back, it's not at all unreasonable to see a correction back to recent highs. If you guys understand charts, if you guys understand even like technical analysis 101, when things that have been rallying so significantly hard, like this is arguably bubble territory right here, just because we've gone so parabolic. And again, there has been crazy economic growth and productivity over the past four years or so, especially in the technology sector. It's not crazy to see a pullback back down to these levels, and you see we didn't even finish that pullback in March. If we did pull back completely back in March to these levels, then from a technical perspective, I'd be like, okay, maybe there's an argument there for more for the upside, but I still think that we could very well see a pullback back down to these levels that acted as an area of support for a solid couple of years. Okay, again, in 2015, 2016, you guys all remember that. That's a very memorable time, and I'm sure you guys can all agree that the economy was significantly better back then. Again, stock market, economy, no longer correlated at all. They're not even cousins at this point. But that also would bring us to a 40% retracement. Remember, you guys, here you can see where was it? After the .com crash wiped out 4 years of gains. This equated to a 40% pullback. You see here 2020 to 2016. I think it's a lot more likely that we would wipe off. I don't think we'll wipe off 8 years of gains, but I think we could very well wipe off 4 years of gains similar to the .com crash, and that would bring us a 40% retracement, which is something that we've exactly seen before. Okay, so that's the chart. Just keep that in mind, you guys. We'll go on to look at this forward PE. Okay, so this is from Yardeni Research. I really like these guys' analysis. They're so consistent as well. So check out yardeni.com for so many charts. Just so much good stuff in regard to charts like this. Okay, so you can see here, this is the S&P. Just as we're looking at it now. Okay, so it has officially broken all-time highs. It is at new highs every day. It's just charging forward. But this is what it looks like in dollar terms. This is what it looks like in actual value. Forward PE, so price to earnings ratio. The PE ratio traditionally is not very favored in the 2020 market environment of this current relief rally bubble that we're currently in. But it has been used historically as a very good gauge of of fair value within the markets. Okay, and you can see here that forward PE on forward PE terms, we are at way beyond absolute highs. Okay, so this means that stocks pretty much just in a nutshell are significantly overvalued in terms of traditional value metrics. All right. And this, again, you guys can dictate value. Obviously, if things are valued at what they are now, it's not a bubble, whatever. But traditionally speaking, and the reason that we're looking at all this is to reference history. And history doesn't repeat itself, but it does rhyme, you guys, and that's why this is important. So we are in crazy bubble territory in terms of actual valuation of a lot of these companies relative to what they're trading for. So keep that in mind as well. And we will close this out with the fear and greed index, and then I'll talk to you guys about kind of my argument for the other side. All right. So fear and greed index is at an all-time high. There was another chart I was just looking at that was great that showed fear and greed. And there's a lot of times, you guys, around crisis time when there is extreme fear. Obviously, during that liquidity crisis back in March, during that huge crash, fear was at an all-time high. Now we've gone from fear at an all-time high to greed at an all-time high. So whenever there's greed, and you guys can look this up. If you aren't familiar with the fear and greed index, then I do recommend you guys look it up. There is a nice video. This is on CNN. You guys can just look this up. I'm sure you can find it. But understand how this works. It kind of dictates a few metrics in regard to futures trading and options trading that is used to find out how greedy the market currently is. And the market is currently extremely greedy. And that's the thing, you guys. In this current environment, when there's davey day traders, when there's so many Robinhood traders preaching that stocks only go up, even like shorts are at an all-time high right now. That's another chart I just saw. Like short positions on equities are at an all-time low, which means that no one is betting against the market. Everyone thinks stocks is only going to go up. And that's usually when I get scared, okay? And when the market zigs, you zag. Obviously, that doesn't work all the time, but we are in kind of a market right now that I believe of sheep. And like, not to be detrimental, I think it's great that there's so many new traders in the environment, and that kind of plays into my argument for the opposing side. But just keep in mind, you guys, we're in a very dangerous time. There's a lot of greed in the markets, and that's kind of how I'll close out that one. Again, you guys, just food for thought to argue the opposing side. Again, there's so many new traders. We have entered a complete paradigm shift in the markets right now. There's so much new money that is looking to put money to work. Again, you guys, they're printing money. The Fed, the printer, the money printer goes burr. They're injecting trillions of dollars into the economy. That is the primary reason that the stock markets are at an all-time high right now, in the worst economy, arguably, of our lifetimes. And you just have to keep in mind that, especially with a lot of people out of jobs right now, I feel that humans are innately productive, okay? And they do want to try to make money even if they're getting fed money. So much unemployment, you guys, and I've seen charts of brokerage owners tweeting the amount of money that, like, you get the $1,200 stimulus check, the amount of $1,200 deposits into brokerage accounts, investment brokerage accounts, goes through the roof. Okay, so people still want to have their money make money. We are in an era of saving, and that's why the U.S. equities are so high too. The dollar is down, is another contributing factor. A weak dollar leads to strong assets, that because you don't want dollars, you want appreciating assets, not a depreciating dollar, which obviously happens when you're printing trillions of them. So there's so many factors at play that also lead to a strong equity market and more reasons for the stock market to continue to go up. I'm going to say this right now. I'm not going to get into the politics of it, but I think that it's much more likely that the stock market rally does continue if Trump continues towards a second term. If Biden takes over, I think the chances are significantly higher of a significant pullback in the equity markets, just because it's such a paradigm shift, not only in what we're already seeing in the markets, but like from complete policy, from a government perspective. Okay, so Again, you guys, always go do your own research. I'm not sure what will happen, but I will keep you guys posted, of course. So please do subscribe to the channel if you want to catch more content like this. I'll always keep you guys posted. I'm very passionate about this stuff myself, so I love making these types of videos. Please like the video if you did gain value from it. Subscribe to the channel. Once again, if you're new, drop a comment down below. Please share with me your thoughts. I love learning from you guys. I love talking shop with you guys. So I will see you downstairs. And if you do want to know how I'm personally positioning myself through this, I have been hedging my portfolio with the assumption that we will see a pullback in equities. Not to brag, but I have done very well in certain sectors over the past few months. You would know that if you've been tuning in, but the market's really sketching me out right now, you guys. So that's why I'm hedged gold, silver, cryptocurrencies, Bitcoin, like safe haven store value assets that aren't equities right now. Although, again, equities could very well continue to keep ripping, especially in the tech sector right now. But if you guys do want to know exactly how I'm positioned, all my call options, all put options, stock positions, cryptocurrencies, as well as getting a newsletter in your email from me every trading day during market hours, just more real-time updates from myself. I break down the trades I made that day, talk to you guys about my more real-time thoughts on the markets, and yeah, it's just a good way for me to give you guys more updates from myself in real time. Okay, so I appreciate it if you guys check this out. First link down in the description if you're interested. If not, no worries at all. But yeah, again, I'll catch you guys downstairs in the comments, and until next time, always remember, take action, make waves. Peace.